Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. This is the show where we talk to successful real estate investors about real goals, real money, and real estate. Our guest today sold everything in 2016 and moved with his wife to Charleston, South Carolina, and now controls over $22 million worth of commercial and residential real estate. He has appeared on stage and on many other podcasts speaking about his experience and expertise in real estate investing, all the while working as a consultant for Fortune 500 companies. Danny Randazzo is head of acquisitions for Randazzo Capital. Danny, welcome to Purchase and Profits. It's great to have you on the show.
Seth, thank you so much for having me on. I'm excited to be here and try to add a little bit of value to the show and to your listeners.
For sure. I'm excited to hear about what you're up to. So for our viewers who don't know who you are, can you explain a little bit about what you were up to before you entered into the realm of real estate?
Yeah. I got started with just building an equity nest egg. And I did that through, working a corporate job and really saving money, kind of living within my means, but of course, having fun and traveling and doing those things. So the way that I equate it to is, I'm not pinching pennies. When I was getting started, I would, buy Starbucks coffee and go on vacation and do all that. But I was frugal in terms of larger spending decisions. And from that standpoint, I was able to build an equity nest egg. I bought a house in California near the Bay Area and started, again, renting out rooms. So from the frugal standpoint, I wasn't spending a ton on my cost of living. I think I was out of pocket like $400 or $500 because I had renters living with me, renting a bedroom, and helping cover, taxes, insurance, and other utilities and things like that. And so they were really footing a majority of my cost of living bill. And from that standpoint, I was able to continue to kind of compound and grow my equity nest egg because I would pretty much put every available dollar into save to a future opportunity. And I really bought into the pay yourself first mentality, or the rich dad, poor dad mentality that Robert Kiyosaki preaches about, taking your hard-earned dollars and having them work for you. So every dollar that I could get, I would put it to work to make, a quarter, and it just would compound itself. So from that standpoint, my goal when I was starting out was just to build that up and buy more assets. And so my wife and I decided in 2016, we would kind of sell everything off in California, relocate to Charleston, South Carolina, with the focus in building a real estate portfolio that generates passive income. And through that, I kind of set the first goal that I had when we got there. It was to buy a property and generate about $5,000 in passive income per month. And so I worked that backwards to say, what value property do I need to buy that can produce that amount of cash flow? And so when I worked the numbers, starting with my end goal of cash flow, which could be comprised to get to that number in my market at that time, it would have been like 10 single family rentals or one commercial building. I was able to find a commercial building, bought it, and just got started from that point, making that decision, knowing that real estate is the path forward to create generational wealth and one of the best asset vehicles to protect and grow your wealth.
So why did you choose Charleston if you were making a move strictly for real estate? What attracted you there?
The high level market was really good. So we had a few places around the country that we were looking at, and Charleston happened to be one of them. The other big factor and why we settled on Charleston is we really had a built-in network in the community. My wife is originally from Charleston. She's got some family there, some other connections that we were able to utilize. And, I would say when we were starting out, we wanted to get going right away. And having a network that we could immediately tap into, where we had knowledgeable experts, we had a real estate attorney, we had insurance contacts, we had other professionals to support us. And so we didn't have to build all those relationships from scratch, because that's one of the most time consuming things to be successful in the business, is building those relationships. And so what I like to say to all of the people that I work with in the real estate industry is that, this is not just one transaction. This is the first of many that's going to come. So my partners and I value very highly the relationships that we build. And that's the only thing that's going to make us and keep us successful going forward.
For sure. So I think, to me, it sounds like you had a great opportunity where you almost had your team almost in place before you even got going. And like you said, having that team, it's the team that makes it successful. One person can't do this alone, right?
Yeah, absolutely. And, what I would say to a listener who's probably saying, Seth, Danny, tell me, how do I find that team? Because I need that for my business. What I would say is kind of keep going, keep doing what you're doing, keep going to coffee meetings, keep reading, keep educating yourself, keep looking at deals, and you'll know when the team or the valuable contact shows up or presents themselves in what you're doing on a regular basis. And so there's not a kind of silver bullet answer of do X and you'll receive Y. It is really, just keep doing and keep trying to better yourself every day. The same reason that you're going to listen to this podcast, and, you may listen to more real estate podcasts. You may pick up a book. You're always trying to improve yourself. And by doing that, you're going to attract like-minded individuals. And so that's kind of how we stumbled into our team, is because we were looking to expand our lives from just living in the Bay Area to having a real estate portfolio. And that took us to Charleston, and that led us to a network, and that led us to more people and more team members, and really expanding and growing our network so we can be supported from all areas that we need in order to be successful in the business.
Mm. And I found it interesting that your original goal was $5,000 of net income a month. Some people have a goal of, I want to own, 3,000 units, or they want to have total portfolio value. What drew you to making that monthly income goal versus another way of setting that goal?
When I was first getting started in, 2016, we kind of sold everything off, and I needed to start somewhere. And so I think putting down a goal of making $1 million per month, or whatever, 12 million a year, was not realistic. And I don't think I would have ever found the first deal, right? In order for me to have a property that generates $12 million in cash flow, I don't even know what it would be. It might be worth like $1 billion or plus dollars. And so for me, I couldn't buy $1 billion asset, but I could certainly afford $1 million commercial property that did generate $5,000 in cash flow. And so that was my initial goal. And then every property since then, I'm building to that number. And so as your goals evolve and change, my wife and I went through our goals this weekend to get ready for 2019. So we kind of went through the exercise of checking off, what did we achieve for 2018? If we can still get a little last minute push in these last 2 weeks, we will. But we felt pretty good about what we've accomplished in 2018. And so we set our goals for 2019. And you got to have something that's measurable. And so for me at that time, starting, that was something measurable. And that's what I wanted to achieve in my first deal, or very quickly right away. So I did measure out, if I didn't buy a commercial building, I probably needed to buy 10 or so single families. And I started to learn that, there's a lot of fees with single families. The cash flow is much less, and you've got a lot more management because now you've got 10 different properties to drive to and 10 different things that could break. So by going and investing in commercial property right out of the gate, I was able to really learn and kind of hone in on there's something very important in real estate about scalability and your time. I'm not saying you can't be successful with single family rentals, but that initial opportunity, I was able to do one deal and generate that. It would have taken a lot more single families to get to that number. And so for me, it was important to achieve that number. And that's kind of what drove me to find that property.
For sure. So let's talk about that deal. So you had already scouted the location in terms of the city you were investing in. You had already built your team at that point. How did you find the deal? Was it sourced from a broker? Did you contact the seller directly?
The deal itself was a marketed deal. It had actually been on the market for several months, and it had some dated information that I think the listing broker just hadn't updated recently. And so I didn't see that property I didn't see that property until I wrote my goal down, and then I found it. So the goals are very important. I write them with paper and pen. I suggest you do the same. So it's not a, sometimes busy exercise on the computer where you get distracted with email. It was marketed before I started looking. I didn't know what I was looking for, so I couldn't see it. I couldn't find it. And lo and behold, there it was in front of my eyes for a couple of months. And I finally got my goal written down, and it popped up pretty quick. So that being said, it was a marketed deal. I called on it. I received some information. I uncovered that the occupancy was actually higher than what was advertised in the listing. And so that meant that the cap rate, or how commercial and multifamily is valued, was a higher cap. And so I was getting a better deal than what was actually listed because the property was generating more income. So from that standpoint, again, I'm going to go back to the goal piece. If you know what you want to achieve, it'll help you filter out to specifically what criteria you should be looking at to narrow down your search, because there's millions of properties available for sale, on market, off market, from the courthouse, from the sheriff's sale. So once you kind of narrow down what you want to achieve, you'll have a better list or a better target to spend your time looking to find that deal.
For sure. And especially in real estate, everybody talks about finding your niche. Now, somebody starting out might not know what their niche is, but they still need a way of filtering out the thousands and thousands of deals out there into something that they're able to tackle at that time. So with this one, so it was a marketed deal. Were you able to acquire this using your own money, or did you bring in any partners?
Yeah, so I acquired this using all of my own money. And the reason for that is kind of going back to that equity nest egg I talked about earlier. In order to kind of get started sometimes in real estate, you have to have money to do a deal, or you have to have good relationships with people who have money to invest. And so what I wanted to do was do my first deal and kind of have a proof of concept to say, hey, friends and family, close network, I'm investing in real estate. I know you've heard me talk about it. I know that I'm passionate about this opportunity, and I'm going to do this deal. And then when I look to do the next one, now I'm going to have a better conversation with you as a potential investor or potential partner with me, where you can bring the money and I can help facilitate the deal in order to grow. Because again, yeah, my first goal was to achieve 5,000 from that one deal. But the number is much bigger. And in order to get there, I need to have partners and investors that trust me and that work with me in order to get to where I need to go, which again goes back to relationships. It's really important. It's not just a one-time transaction. And so this deal meant a great deal to me that I was able to self-fund it. And I could tell potential investors or partners, hey, look, I've got a deal down the street. I've put all of my own money into it. Here's kind of the numbers on that. Yes, I know what I'm doing. I've proven it. And I'm, willing to work with you on this opportunity. Do you have faith in me to do it? And you just kind of have to get started one deal at a time, right?
Yeah, for sure. Now, because you were funding this on your own and managing it, as the sole owner, did you have any challenges when it came to getting the debt for the property?
I did have a couple. I had originally gone with a local community bank to do the lending on it, and I was able to kind of self-qualify from a debt to income perspective for that loan. And then about 30 days or so before the closing was set to take place, the lender that I had spent about 60 days building a relationship with came back to me and said, we're not going to be able to do this loan. We like you, we like the deal, but you've never done a deal before. And so we'd like to have someone else be a loan guarantor and sign on the note with you. And so basically that meant I needed to find someone who had a balance sheet or a net worth or more income to sign on this debt and say, we'll repay the debt if Danny can't. And so you could imagine going to different people and asking them to do that and the challenges that it brought. I didn't find anyone, and I didn't really feel comfortable doing that. And ultimately, I built some more relationships. I talked to probably 10 or 15 different bankers and finally found a great local community bank that did do the loan, and it was fully in my name and all of that. So it worked out in the end, but it was a little stressful for that first little bit when the bank that I was going to go with decided, no, it's not going to work out. And so I found another one.
Yeah, especially 30 days before your first closing. That's
yeah, it was about, I think, 30 or 50,000 of earnest money out there too. So it was important to me to get that deal done.
For sure. So what initially attracted you to this deal? I know you saw it once you had your goals laid out. Was it a value add opportunity that you saw? Did you like the location? What drew you to it?
Yeah, the location was good, and I felt that there was a value add component to the deal. So not only could I buy it and cash flow day one, but I also had some vacancy that I could fill at the property by getting another tenant to rent the space. And that would create about, I think the rough numbers were like $250,000 in equity just by increasing that NOI and then taking a cap rate factor to the NOI to evaluate the market value for the property. And so that was a big component to it as well. And it was a good amount of work for me to get that tenant over a 3-month period, but well worth that effort in the end.
For sure. So did you end up doing a refi once you brought that up?
Yeah, and again, that was part of my long-term thinking of doing this first deal. I figured I could tie my money up or my 20% down payment up for maybe 12 months and then do a refi to get all of my money back out. And what I'll say to a refi when there's a cash out option is talk to 20 different banks. Because most of them are going to want you to have quote unquote skin in the game, or your own equity in the deal, let alone I created all this equity and valuation increase. They like to see you that you have actual cash in the deal. And so I did do a refi and I got about half of my cash out. And I'll look to pursue another one to get the remaining cash out because the value has gone up since that time. So that was always part of the strategy because, again, my goals were bigger than the money available in my bank account. And so I knew if I did this one deal, it's going to tie up a lot of my liquidity and cash, but it's going to prove the concept. I'm going to be able to do a couple deals with some partners in the next, year. And then I'll look to refinance my first purchase and then use that capital for another deal. Again, kind of that frugal mindset of I'm not cashing out to go on vacation or buy a fancy car. I'm cashing out to do the next deal. And then I'm rolling that money into the next deal. And so that equity nest egg, it just kind of tumbles and grows and grows and grows.
Yeah, and that's one of the most beautiful things about real estate, because you can have a deal that you own with none of your own money in there, and it's just gravy after that point.
Yeah. Your return on investment is infinity, or it's not even measurable because you're dividing by zero.
Yeah. So did anybody help you with that business plan? Or did you just base that on, something you've read? How did you come up with the whole game plan for, bringing the rent, getting the vacancy down and doing the refi?
Basically it is, I kind of learned it on my own as far as like how properties are valued. And I'll kind of go back to my education component of reading books or listening to podcasts and stuff. The internet is a wealth of information. Books are a wealth of information. So if you're curious about a topic, say for instance, refining a commercial property, you can read a gazillion articles out there on the steps to do it, or you can watch YouTube tutorials about how cap rates and NOI generate the property's value for commercial and multifamily assets. And learning that and really studying it, it gave me the knowledge to know the power of generating more income and having a cap rate to create the value in order to calculate like where I could refinance the property for compared to where I bought it at. And so that gave me the tools to kind of dig enough and research it because I was very interested in that. As you can imagine, I wanted to do more deals, and here I've got this money sitting over here in this first property, and I would love to get access to it to do the next deal. And so, go out there and read and research, and it's a daily goal of mine to learn something more and really improve myself from yesterday. And so every day I'm evolving and growing and just, a better person than I was the day before.
Yeah, and I think that's where your team comes into play as well. Depending on which state you're in or which province, there might be different rules and regulations. So your team member who's local can really be a big asset for you when you're considering, planning out a refi, 2 years down the road or something like that.
Yeah.
Yeah. So you still own this deal. You had mentioned you're planning on a second refi pretty soon to take out 100% of your initial capital.
Mm-hmm.
How have you really benefited from doing this first deal? Like what has the snowball turned into after that first one? Where are you right now?
I think the look back that I can take from where I am today to where I was, that deal was a critical point because it allowed me to prove the concept. Then my second deal, I brought in partners. And then I brought more partners on as I continued to kind of build and invest in a variety of asset classes, which brought and gave me diversified experience to learn how commercial investing works, how smaller single family rentals work, how small 2 to 4 unit multifamilies work. And I learned how to do some short sales. I learned how to do foreclosures and buying at the auction. And I think that really taught me the importance, again, of scale and how do you want your business to grow and evolve. And from that standpoint, where I am today, I am solely focused on investing and buying 150 unit plus apartment communities that have value add opportunity, that cash flow, and are built between 1980 and 2010 or so. And so for me, that criteria is very strict. And the reason why I like multifamily so much is because it allows you as an investor, as an owner, to really control the valuation. You can physically do work and put your time in to increase the value of that property. Versus, if you invest in the stock market, you kind of put your money in and hope that the stock goes up. There's nothing that you or I could do to impact that stock price to go up or down, So from that standpoint, I like multifamily. I think there's some economies of scale there that as you grow a portfolio, you get better benefits. You can have better relationships with property managers to give you better rates. You can bring down contractor costs because they're not working on one unit. They're going to work on 150 units. And so that kind of snowballs across the board with any sort of expense that you have on your single family house. You're going to have that same expense times 150 in an apartment community, and vendors are going to give you a discount, and that discount is going to fall directly to your bottom line in a positive way with your net operating income, which again increases the value of that asset. And so my hard work and time and my partner's hard work and time allows us to generate value and do it very quickly and in a scalable fashion where we can predict the outcomes that we expect.
Yeah. And I think scalability is the key word there, because you can't, if it's not scalable, you're going to be stuck at the same level.
Right.
So thinking back to when you're moving to Charleston with your wife in 2016, if we talked with Danny back then, would he believe us if we told you where you'd end up today?
Yeah.
Yeah, that's good. That's a good answer. I like that.
Yeah. And, I think about that a lot because, I think real estate and investing takes a bit of passion, a bit of luck, and a bit of good hard work. And so from that standpoint, I can control kind of two of those things. I can control my passion, which I've got, and I can control my hard work. And I know I can be successful in it. And so having some lucky opportunities where a deal just kind of presents itself after you write your goal down, great, I'm going to take that and I'm going to run with it. But, yeah, I would certainly believe that. And I've got bigger goals and things to work on for 2019. So I'm excited about coming back to check in maybe at the end of 2019, and we'll talk about where I'm at then.
That sounds like a plan. I'd really look forward to doing that with you.
Awesome.
So, Danny, I just want to thank you very much for sharing your real estate success with us today.
Hey, Seth, thank you so much for having me on the show. And if your listeners want to learn more about me or get in touch with me, they can go to investwithdanny.com and get in touch with me there.
Perfect. And we'll be sure to include your website down in the show notes for everybody. And to our viewers, I wish you well in your journey from purchase to profits. See you next time.